All right. So specifically on Tesla, what do you guys notice when Tesla decides to make a run up? Do you guys notice something specific about Tesla when it begins to start a run up? Have you guys caught any sort of pattern at all? Okay, it dips, yeah, and it shoots up. hmm So apparently, just with those tiny dips, it only takes one dip. Here, I want to actually do it. Take a look at this. This is approximately the first hour of the market open yesterday with Tesla. So I had these levels that I set here, and these were levels that I just set after the market was open. So these are not preset levels. These are levels I set after the market was open. And as I saw that Tesla started trading within this canal, basically, I saw that the volume was decreasing, but Tesla was just keeping its role here, just between these two areas here. So I had a call in the 1950 sites right here, around here. And as soon as that I saw that we were going below this level right here, I started to say, all right, so this is my get out area. This is my stop loss right here. Because if we go down here, now we're going towards the downside and we could see a move towards down here or something like that. Of course, at this point, nobody can expect that this would have happened. But then again, Tesla is Tesla and there's so much hype around it that this type of things happen. So the interesting part about this move first is that the initial push up, take a look at the pre-market real quick. The initial push up was exactly where the pre-market standpoint was. Okay, so that's the tip right there. Then we come down for about approximately 3 minutes. We came down at this area right here. So we broke this area and we came down to this area approximately, which is a perfect retracement. So we move to the top, we come down to this area, which it broke, and then we have a continuation pattern. So that should be like your first thing. The fact that Tesla is holding up above, pre-market levels. Now, again, Tesla has been notorious for, being a dip buy opportunity all the time. Of course, if you dip buy this, go here, down here, you buy the dip, you sell up here. Most of the times what people will do is exactly that, which is just wait for the dip, buy, sell, wait for the dip, buy, sell. And how you could have made this as a day trade, it's actually by looking more into the 15-minute candles here. So there's something special about the 15-minute candles, and especially within this trade at least. And I will show different examples of it, specifically with NVDA and Apple. First, we see some hard consolidation around this area for about an hour. This is 4 15-minute candles around here. But notice that we never went below the first. So we have the first 15-minute candle and then the next 15-minute candle. That makes up 30 minutes. If in the first 30 minutes to 45 minutes of the market open, a stock first pushed up, okay, let me go ahead and get my annotations here. If in the first 30 minutes, let me make it green actually, we're moving upwards, right? This is for the first 30 to 45 minutes. If in the next 30 to 45 minutes of a stock who is near all-time highs or is near a critical level does not turn back down, like we at least would go below this area right here, the support line right here, and touch different levels, expect the stock to start to continue to move up. Why? Because at this point, they're just testing the sellers around this area. So go ahead and take a look at this. When we're testing around this area right here, we come back down to here, push up. We see that this is not a bullish candle right here. when we see this right here, we do not see bullish candles. We see that there's restraint. There are sellers sitting around here. But then, hey, we're not going lower. And this is kind of the area we are currently trading at, between this and this right here. And we didn't break this level at all. So the main concern when looking at something like this and looking for a complete day trade is, okay, you have this level right here, which is your resistance, and this level right here, which is your support. Let's go ahead and take a look at that on the 1 minute chart. As soon as the volume started to pick up, which was crazy, like a crazy volume, take a look at the levels that we drew, or that I drew right here. The second that we broke that 15-minute resistance that you guys saw, boom, that's your first candle right there. If you are a scalper in this situation, let's say you're a scalper, first of all, take a look at the time that this candle turned out, okay? This is 7:53. So if you were scalping, you would at least have the next 2 minutes in your favor, meaning that you would be able to go from 1898 to basically 1907 before the 5-minute candle closes here. Now, take a look at the 15-minute chart once more when you're looking at this. The first candle closes. What do you guys see about this specific candle? It basically ripped, okay? This candle, I mean, all of us right here can realize that this is as bullish as you can get. Literally no wick on the bottom, that's right. And the tiniest amount of restraint. See how this looks like on the 1 minute chart. So this is where we broke. This is that tiny little wick that we see. This right here. So we have the first 15 minutes, the first 15 minutes after this level was broken, completely bullish. 15-minute candle opens, we see a little dip down, and people see this as an opportunity for a continuation of a move up. Now, the thing about this right here, this whole move right here, is that if you're trading these levels and let's say you want to make it an actual day trade, when you're day trading something like this, you want to take a look at the little tiny resistances and supports. Because if we were to go below this level, then we could probably see more of a 5-minute retracement, for example, where we would actually touch base with like 1910 or 1905 before a continuation of a move up. But because of the hype behind of Tesla, obviously this is not happening at all. So take a look at where we see where this level is about to come to. Like, let's say we're right here, right? So we have this 1932 and we have this 1921 right here. The second we break 1932, boom, you have another huge push up and then a brand new high. And it's the same thing. Now we have our high and our low. What happens again? Why is there continuation? Well, look at this right now. We have the low and we have the high. What happens? We never get close to the low, or at least we don't have a candle that closes below this area right here. We didn't close below this area and give continuation to the move. No, people saw this as another dip buy opportunity. And as soon as we break that same area, boom, we break out. Now, Same thing here. We have our low, and we have our high. We were trading in this area for a while, and we broke out. Of course, now look at the time. It's 8:15, okay? And again, this is my computer is set on Pacific Standard Time, so that's why it's like this. But this would be 11:25 EST. And of course, we start to see more and more like tiny moves up, not explosions like there are right here. We see tiny moves on the upside and continuation. Now, take a look at this right here. The reason why this would be an appropriate day trade is this is something that Jay actually mentioned, which is extremely important. If you're day trading this on the just for this day, you're not swinging it, you're not doing anything like that. If you're just day trading it, you want to take a look at the 15-minute candle close. Where is it? Okay? You don't care about what happens within the first or within those 15 minutes. You just care about the last 5 minutes of that 15-minute candle. If that 15-minute candle is beginning to close and you see that it is bullish, okay? We don't care about this, we just care about what their stock is at. So we see that the stock is bullish and closing bullish, which leads to what? Another bullish close. And since this one closed bullish as well, it leads to what? Another bullish close. Now, of course, at this point, we are way overextended. I'm pretty sure everybody can agree that a move that went from 1900 to basically 1994, that's a little bit way overextended. So it makes sense that at this point, which is also lunchtime here, we would get some sort of consolidation. Now, take a look at the fact that we have this level right here and a top level right here. Also, we have the EMA line getting closer and closer and closer, that to the point where once we consolidate and touch it, boom, we jump. Again, this is the 13 moving average exponential. I like to use it personally. It's not my 100% indication, but it does help me out to lead. So that's one thing. We never went below this area once. And even if we were to go below this area, it would be a personal like to me to actually want to go below this area if I was scalping. Because when you're scalping trades, I mean, you want to see this, when a move like this is happening, you want to make sure that there's some sort of, that is a terrible candle, my bad. You want to make sure that there's some sort of time where the stock begins to relax, because the move up can only last so long, just the same way as a move down. So personally, if I'm scalping, I like to see a retracement anywhere between the 5-minute and the 1-minute charts. That's when I'm scalping. If I'm day trading this, the retracement should be anywhere between the low point to just a little bit above the low point. So you guys can see that this happened at the brand new low point, okay? This is the low point previous to that, and this is the low point previous to that. So this is the lowest point of the current trading area, and this is the highest point of the current trading area. We have this area right here, which is our break, which gives us continuation. Now, if you wanted to, for example, swing this as well, because this also follow-ups with swings. If you were day trading and then all of a sudden you're like, yeah, I want to swing it, why would you want to swing something like this? The first thing is this. If you're swinging, make sure you take a look at the daily and the 4-hour. We have an extremely bullish candle, which leads to another bullish candle. But my thing is, where does it close? Is it closing with bullish intent, or is it closing below? You can see that buyers stepped in once more, and they obviously were still finding interest in the stock. What happens the next 4 hours after the market opens? Boom, we push up. So let me go ahead and read some of the things that you guys are posting here. How many 15-minute candles would you wait for confirmation? Almost no wick. So in terms of how many 15-minute candles I would wait, I like to wait the first 15 or 30 minutes if I am looking for a day trade. Since again, the only reason why I know a stock would have the opportunity to continue is because it's holding current levels. Okay. So again, this is the first 15 minutes. Then we have 1, 2, 3, 4. So when I was looking at this personally, and I was like, well, it's already an hour into the market, hour and 15 minutes at this point. Like, I wasn't comfortable with the fact that that much time had passed and there was not a lot of people interested in it. So that was my current view at that very specific moment. But what I should have seen is that, oh wait, it's actually holding above this area. So you have your level right here, and we're not even close to the low point of the 15-minute chart right here, which is basically telling me that, well, this coming down isn't very likely. And it resulted in this. I think Ligor and I tried to short at this area. Don't remind me of that. Okay, he's talking about day trading momentum continuation. Looking to get into the first 50 minutes is totally different strategy. This is a continuation hold for a second move strategy. That's correct. This is for you if you want to continue to hold on through the rest of the move of the day. It's not specifically made for the first 15 minutes. Again, if you're trading the first 15 minutes, I would basically recommend you scalping, since again, there's a lot of things that can happen in the first 5 minutes. I know I've taken a couple trades in the first 5 minutes, and thank God most of them have been, positive in most points. But it's very, very dependent on where the hype is, at least in the first 5 minutes. I don't like the Tesla 15-minute candle before the rip. Yeah, the fact that the only thing that would back this candle up is that we closed above the low point. The fact that we closed above the low point, and then we have, like, let's say this candle doesn't exist, of course. This is what we're looking at. You have this area right here. If we break above this area, the probability of a continuation to break above this high point right here, or the resistance, is a lot more likely to happen. If you guys are interested, we can cover other day trading, early opening day trades. I see. Look at that dead volume. That's confirmation for you. What are we seeing on the 1-minute chart for confirmation? So, okay, here's the thing, Chris. You're looking at the 1-minute chart to get in. You're looking at the 15-minute chart for your confirmation. When you're day trading, again, day trading is holding a stock for the day, okay? Or holding option contracts for the day. It doesn't matter. If you buy the stock or you buy contracts on the stock, you want to make sure that, number one, what you're looking at is for the long run, not for the short run. Again, if you're looking at the 15-minute chart and you're day trading, you're going to go insane, because the 1-minute chart moves so fast, and it moves, it's volatile like crazy. It may happen what happened to me. I was looking at the 1-minute chart, and then look what happened. Oh, I got out. Instead of keeping my money in there and then having to wait until I could, be able to get back in there. Because I was just going to chase if I was going to go up here, try to get in, and then look at this move down and be like, oh, it's over. The first 15 minutes is risky even for scalps. Yes, it is. You really have to know what you're doing in the first 15 minutes if you're going to scalp or even take on a day trade. Again, the reason why when day trading, you want to wait for the first 15 to 30 minutes is because you want to see which direction it's taking. Okay. So if you're expecting a big move, and this is mainly when you're expecting a big move. Okay. If you're expecting a big move on a stock, which in this case, it wasn't really, what we were expecting. I don't think anybody, or at least myself, I wasn't expecting Tesla to break all-time highs here, but it did. Okay. So we got to deal with what we got to deal with. And as soon as that we saw Tesla holding these levels, because you can see we pushed up, we held that level, and we had continuation. Okay. We pushed up once more, we held these levels, and then what happens? We have continuation. Again, continuation, push up, we held these levels, and even pre-market, we have continuation until the next day. And of course, in most cases, when you actually have this move up and you actually keep your money in there, you probably want to sell the first 30 minutes. Because when something like this makes such a high move up, it will most likely continue to make a move down. Just retracement values, to be honest, at that point. The fact that Tesla continued to make a move up after it came up right here is actually pretty baffling to me. I hadn't seen that in a while. But do you guys understand currently what I'm okay? Option prices are jacked up because of the high volatility in the first 15 minutes of the day. Yes, and specifically on Thursdays and Fridays. If you get in the first 15 to 30 minutes on Thursdays and Fridays and you're not scalping, you will experience theta. It's a given. If your contract is out of the money and you're still waiting, you need to understand that theta will come for you. Does everybody understand currently the price action, at least, of this? Is something unclear? Okay. All right. Just Jay, explain the insane spread. Okay. It's good. Explain your execution, how long you wait to get in, why, when, where. Okay. So if the stock is holding when the first 15-minute passes, and then the next 15 minutes we have bullish action, which is in this case here, we have our low point, our high point once more, and we're holding above here. Personally, I like to get as close. I know it's pretty risky actually, but I like to get as close as to the low point as possible. Because let's say, like when I want to get in is when we are as close as possible to the low point of the stock I'm trading. Why? Let's say, again, the low point is your stop loss right here. This is where you call it a day with the play. Okay, this is where you're like, yep, you know what? I'm good. I don't want to experience this on the move down, and I don't want to, take a loss until this point right here. So if this is your stop loss right here, I want to get as close as to this position right here, as close as I can to this area. So if it does go below this area, I could just take my stop loss as soon as possible and not wait until I'm right here, take the trade on the break, and then realize, oh, the next 15 minutes looked like this. Like if we started to see something like this, and then I got in right here and experienced this downfall, and then I hit my stop loss, I would be, I don't know, with the current contracts of Tesla, I'd be like $400 down. Versus if I got in right here, or right here, all I experience is this much loss, and this is my stop loss right here. So, yeah, I basically take the dip right around this area. And again, if let's say you thought that the next candle after this one was going to be the the break, then okay, it didn't happen. But the only thing backing you up right now is the state of /ES or SPY and where are we closing. You always want to look at where are we closing. Are we closing above the low point or are we closing below the low point? Let's say that this candle actually looks like this, right? So are we closing here or are we closing here? Are we holding this level? Are we trading between these levels? If we are, the only thing you have to do is basically at this point, you risk here to sell here, your low point, in case it actually goes against you, and wait for a re-entry near the high point if you decide to sell around here. Like let's say this actually happens, right? This is the next candle. Let's say that this is actually the next candle, okay? We close below this area, but the next candle looks like this and continues a break, and you know the entire Tesla move that happened in this day happens. Then I would actually go ahead and say, yeah, trade the break and then take profits wherever. I mean, the way I saw it is that, okay, once we are up here, let me go ahead and get rid of this real quick. Once we are up here, I want to see where this closed. Obviously, expect a move down, just a small move down within the first 1 or 2 minutes of a 15-minute candle closing. That's just, it's almost law. When you're day trading, the only thing you're worried about is where are we closing? Are we closing above the level or are we closing below the level? So this is our next candle. This is our low point. This is our high point right here. Did we close above the high point? Yes. Do we have bullish action? Does this candle look like this or does it look like this? You know what I mean? Should probably be green just to give a better example, but yeah. The close matters when day trading doesn't get screwed between. That's how 90% of new traders take losses for no reason, including me when I day traded. Yes. Yes, I always try to get in the best entry, best thing for risk management. And again, you want to care about where we're closing. And let's say, okay, let's give the example of this not being a continuation move, right? This now, don't like, this didn't happen. Imagine that this didn't happen and this candle actually looks like this. Because this is something that you're definitely going to see because all of these moves that are happening on Tesla are not an everyday thing. So if you're day trading this, and let's say, okay, this looks like this. The only good thing that you have right here is that buyers stepped in around this area. And number two is that this right here is your retracement. So now what you want to see if you were to continue holding something like this, you would want to see your close like we jumped around this area, okay? Assuming that the last 5 minutes of the candle are right now, and the candle before closing on the 15-minute chart looks like this. There's only 5 more minutes until this candle closes. It looks like this. What you would want to see is something like this. If the candle starts to look like this, that's where you keep your money in. Because in most cases that says, huh, buyers are pretty interested. So our next candle can look a little something like this. And I'm sure most of you guys have seen this, including even on the 5-minute or the 1-minute charts, where we move up, we dip down to retracement, and then we have continuation. This is also called something as, let me erase that right there. This is also called the H pattern. You know, this is kind of like an extended H if you actually think about it. I mean, the way it looks, it's just this massive H right here. But it basically follows the same principle. And that actually follows towards the next day as well, where we have this right here. You see, we have the wick and then the continuation on the upside, which we know almost ended at 2100 also. All right. Levels, I will cover tape after. What are you looking for the bid and ask to get into the trade on this strategy based on the levels? So Jay is going to talk about a specific bid and ask. I believe that he actually spoke about it in the last one. But he's going to cover the tape specifically. And I believe he's also going to use this example. So Jay's going to go ahead and cover that for you guys. But when you're looking for this, at least on the tape side, I know all of you guys can see that the volume here is dying, okay? But when it's dying, ask yourself, what is it doing? If it's dying and it's holding, or is it dying and moving down? Because we know that when volume dies, it's usually because there's no more interest in buying the stock. And as soon as the volume kicks up, boom, we might start to see a sell-off. But volume is dying here, and we are holding this area quite nicely. And as soon as the first candle of volume starts to show up, we have a break. That's the first good sign. If you're actually getting into this as a day trader, or at least as a day trade. Then we have the continuation volume. And again, after this, boom, we see a volume decline. But as the volume starts to decline, take a look at what happens. Even though the volume is declining, we're still holding that level, meaning that as soon as the volume starts to kick up again, which it will near power hour, which is what it did, we will continue to see a push up. And then that follows up to the next day, and so on and so forth. I will cover days like this where it's basically everywhere and we just traded a box. But I want to give Jay some time of his own as well. I just wanted to give you guys, again, same concept, but on NVDA, just something that we just saw. This is actually today. So again, first 15 minutes, second 15 minutes. What happens? We have our low point, we have our high point. Again, going back to the H pattern, which we explained, we have this move up, this move down. Buyers showed interest. Continuation of the move up. What are we doing? We're holding this level. We can see that the volume is obviously declining within this area. Volume declining, we're holding. At this point, you want to see what the S&P 500 is doing as well, because that's definitely going to help you out depending on which way it's going. Now, if we want to see a continuation above this, where is the S&P at this time? Let's see, actually. It's 815 right here. It's 815 right here. So we have a green close and a green close. We have a red close and a red close. But even though the S&P is coming down hard at this point, this is holding, which leads to a continuation. Volume comes down each time, but we see it hold and hold and hold and hold. Now, obviously, this was the top right here. And if you were day trading this, this is an easy 200 or 300%. You just have to look at the low points and the midpoints. Are we getting close to the low points? If we're not, go ahead and make sure that you're analyzing your risk first. You analyze that, okay, if I know that this is my low point right here, this is my low point right here, this is my high point right here, I want to get as closest to this area as I can. But let's say that, okay, you're watching this and obviously you don't know if it's going to come down to this area or not. Just make sure that at least, for NVDA, $2 could affect your strike price insanely. So I would actually wait until the break of this area, because if it actually comes down to this area and it actually does, make a continuation on the move down and it hits your stop loss, again, keep in mind it's Friday, you're going to see a very, very big loss right here. So I would actually take this on the break, see how it's doing, and make sure that you're choosing a contract that is near, at, or in the money. I would probably say at the money, just so you guys can actually get that in the money push. But if you guys want to be extremely safe about it, go ahead and go for in the money, as theta actually doesn't hurt you as much. It still hurts you, but it doesn't hurt you as much, specifically when you're pulling up like this. Never thought about comparing it to /ES like that. It's not about comparing it. /ES is not, /ES and SPY do not dictate, or don't compare them together, okay? Because this will not move the same way as SPY does. There's been times where SPY is coming down and, I don't know, Amazon is coming up, and it's using the small pushes up on the upside that SPY does to continue the move up, okay? Can you see it held, but you can see it held, but /ES dumped. Yes, that's what it means. So take a look at this. It dumped right here, but it held perfectly. Why? Because there's a lot of interest in buying this stock at this very area, this area right here, 496. There's a lot of interest around this area. And since there's a lot of interest, the only thing that they're waiting is for this candle right here. I'm actually going to show you the time of this candle right here. This candle was at 9 a.m. and this candle was at 9 a.m. So you can see we have continuation as soon as this starts to go our way. So you can't really compare them together. What you can do is use this as a guide to see, okay, where we are economically right now. Are we on the upside? Are we on the downside? Are we going down? Is the trend of /ES coming down? Is the trend of /ES going up? Obviously, the Feds are not going to let this come down, so you should be looking at stuff on the upside, at least since we're below all-time highs. But again, the important thing right here is that we held above the low point and we closed above the high point. you want to get in as low as you can towards the low point. So if it were to go towards your stop loss, you lose the least amount of money. And it's also pretty good because if you buy it down here and you experience this move up, you have from here to here. So you're actually minimizing your risk and maximizing your profits if you decide to go for this 15-minute candle, or hey, you decide to go all the way up here, right? Or wherever you'd like to sell. Specifically when it comes to NVDA, I know for a fact that NVDA doesn't make hard moves like Tesla. So I would take profits wherever I could. And yeah, that's my personal opinion right there. So did everybody more or less understand what I tried to, come through? Everybody understood what it basically looks like? And this also accounts for the downside as well. If we're on the downside and we start seeing that, okay, it's not coming up within the first 30 to 45 minutes, it's not reversing and it's not breaking the high point this time. Yeah, go ahead and get near the high point so that if the stock is looking like this, let's say, okay, we have right here, we have the high point, we have the low point. If we are holding this area, right? I know, sorry for my terrible candles, but we got to do what we got to do, right? So if we're holding this area, just the same way as right here, like let's say that this was a red candle, right? So we have this move down, we move up towards the high point, but we don't break it. This is where we closed. You want to see if you could get a little bit of a touch up just so you can get in right there and experience the break towards the downside. Obviously, you want to make sure that when we're breaking, you see a fat volume like here. And yes, it needs to be big because you want to make sure that it's not a fake out. But again, that's basically it. Everything okay? Nobody have any questions so far? Because if we don't, I'm going to go ahead and let Jay take over. All right. All right,
Okay.
Jay, can you hear me?
Yes, I can hear you.
All right, perfect. So I'm going to go ahead and make Jay the host real quick. And he's going to go ahead and explain what he has to explain. We're going to be talking, or he's going to be talking about a little bit about the tape. And we're going to be learning a little bit about him, all right? Some of his strategies. All right, so Jay, you are now host. Go ahead and share your screen.
Okay, let's see. Okay, can you see my screen?
Yes, we can see your screen.
Okay, perfect. So I'm gonna first be going over, first I just want to say something. Well, the strategy I'm going over is mainly gonna be scalping, and inside that, I'm obviously not gonna teach everything about scalping in like 45 minutes, but there's a few important things I'm gonna cover and then go on to the tape. So first, I just quickly want to talk about plans. So when you ask someone what their plan is, a lot of people will say, I'm scalping breakouts. So here, that's where the biggest problem with people who are relatively new to trading comes. When you're scalping a breakout, that's not a plan. That's just saying that's my style. That's the style of trading. So when you have a plan, you should plan it exactly down to the setups you're looking for your execution, where you would get in, where you would get out, where's your hard stop, what's the criteria you're looking at to stop out sooner, all of that stuff. If you don't have a plan exactly like that, and I would recommend written, but at least mentally, it's extremely difficult to succeed because you're trading kind of blind almost every day. So, wait, there's something that popped up on the chat. Okay. So, on that note, first I'm going to talk about what I call anticipation. It's not exactly anticipation, but that's the best name for it. So, can you see what I'm drawing on the screen, Emiliano?
Yes, I can see it, and I'm sure everybody can see it too.
Okay, perfect. So what happens is we often get this breakout range. We see a stock move up strong, it gets into the range and starts going like this. What happens is a lot of people try to get in at basically at this point as it's breaking, or they try to get in as the retest happens. The problem here is that when you try to get in here, if it's a fake out, you're getting in after what's called an implied volatility spike on options. So the contract will jump sometimes 20, 15% just as it breaks. So you're going to take a much, much, much bigger loss if it reverts and it turns back down and comes down like this. So what happens is, I learned this after a long time, a lot of losses and watching videos, but I learned that the best way to get in on these normally is either you watch the stock, let me get the pencil. You watch the stock push up like this, and as it approaches using the tape, which is what I'm going to cover next, tape, momentum, volume, SPY, all these things put together, you get in as it's pushing. You get in maybe as it's touching the level, getting closer to the level, ideally before that spike. So that's mainly how I'm going to be talking about the tape in that context today. And I think that a lot of us are scalpers, and most of us are scalpers. Some are day traders, some do both. But this skill, knowing how to get in before the pop, makes your losses exponentially smaller. Like instead of taking, if you're on a Tesla contract for $20, if you get in on the pop when it reaches 22 and it falls back in, you're taking a $300 loss as it reaches 19. While on the other hand, if you get in before the break at 19.5, you're taking almost break even $100 loss. So that's where the tape really comes in, tape and SPY, most importantly. So this is I'm going to start with the FedEx clip from On Demand from August 7th. So what we're watching is it makes a huge move up. It had a pre-market catalyst. I'm not exactly sure what, but I'm pretty sure it was an upgrade in news about the election and UPS being used and all of that, which UPS, FedEx have been recent runners multiple days. So what we're watching now, let me get the cursor. So what we're watching now is it's made its pre-market run up. So as we see this, some people would say you can get in above the high of this candle, you can join the momentum. Whenever something's up more than 2 to 3 bars, I would highly suggest not to enter unless you see this sort of pattern where it goes, you get the breakout from the range and you have a lot of candles with buying tails. When you get these, then you see that the buying pressure is still there. It's so bullish that it's not taking a full break. So at that point, then you can consider getting in. But if not, you don't want to get in on a pattern that looks like this, where it's 3 bars up. These are probably the times where you get in and you're like, it looks like a perfect setup, and the next thing you know, the stock is just solidly coming down to low of day. You had no option to get out. It's just dropping hard. And that's mainly because you're entering where other people are profit taking. Institutions, experienced traders are profit taking and selling. So that's the first problem. But let's watch the tape here.
Before you actually go ahead, I just want to add to that. That's where your mental capacity of trading comes in. Like, if you are seeing this as a scalper and you get a lot of FOMO, make sure that you're controlling yourself, because for myself, I've experienced a lot of times where I lost money, and specifically around those same scalps where you get in at the break at the top, and then it all starts to come, down on you. And then you start saying, the market is just waiting for me to get in as it starts to plummet down. So I'm sure most of you guys have experienced that, where you get in and then all of a sudden, oh, it's coming down. So just wanted to add that in there.
Emiliano brought that up, I think that's actually a really good point to put in here. So if you look at this, let's say you don't get in here. You missed this initial break. There's no, in my opinion, there's no re-entry here unless you're already green on this trade. Then you could possibly add for a minor scalp to get out for maybe 10, 15 cents on the contract. But the only re-entry I see here is as this candle forms as it pushes, or the break of the high of this candle. After that, this is extended. So I'll actually give you guys an example where if I got in today, I would have been screwed, but following my plan, I avoided that. So I missed the original. I couldn't anticipate this when I was trading Tesla at the time, but I came back and I saw this broke and I was seeing this retest candle form. So as the retest candle confirmed, I got in above the high right about here. And I was actually on the Discord. Me and like a few other guys were talking as we took this trade, and I got out right about here. The temptation to get back in on this giant move is like overwhelming as you're just watching your contract run from. I got filled, I think, down on Baba. I got filled down at 227-ish, and I got out at 238, 240. This contract ran to 4 straight on this move, which would have been easily 150% on it to trade. But I didn't re-enter because I've seen this pattern hundreds of times on Tesla. It's up 4 candles, you get in, and it drops your contract 40% in a matter of seconds. So that's just something. It's like me, Emiliano, other people who've been doing this for a while are warning you don't get into these because these can be detrimental to your PNN in general. So I'm going to now be talking about, I'm going to go back to the tape and we'll talk about the FedEx example here. So that was on August 7th. So now you're seeing a stock that's up nicely and pushing. And now we'll watch the tape here. Let me see if I can get time and sales to load. Just a little bit laggy, but it's actually not too bad in my opinion. But if you watch this, if you guys have DOS, you have replay mode, any other broker, you watch the tape, it's so much cleaner than Thinkorswim, but this is what we have for now. So I'll be showing it here. It's buffering. Once it loads, I'll explain on this one. So here I'm going to be explaining a few things. First of all, when you're anticipating a breakout, how to avoid getting in where you're about to get popped right back out, where you're about to get in, because there's about 5 entries where it pushes the 174 level exactly, and it doesn't break. And if you got in, even if you got in each time and you kept your losses small, it's manageable, but those losses are avoidable. So that's what I'll be talking about here. Still buffering. So we'll give it a minute. Hopefully it loads. Okay. While I'm waiting on that, I'll just talk. Okay, loading, never mind. Okay. So we're watching the 174 level right now. So on that note, before we start, whole numbers on stocks that are cheaper, really cheap, 0.5, 0.10 cents on larger stocks, 100, 200, 300, every whole number is a possible resistance. Apple, for example, every five is like major resistance. Tesla, it's the 10s. Amazon, it's 10s and 20s. So you have to be careful at those points. Like you might not recognize it, but when you see the tape, when you see it moving, be really careful about this. I took 2 losers in the last 2 days, just missing out on whole numbers, getting it on what looked like a clean break. Tape rejects at the next whole number clearly. So let's watch this. I'll explain as we go. I might pause a few times to show you guys stuff. So the tape's right here. So I don't know if it, okay. So we're getting a push up. This is a little slow for right now. Okay, so it's pushing 173. And you see that there's size. There's 5 and 3 still sitting here at 174. So we're watching still. There's no entry yet. I don't see size decreasing. I don't see the tape speeding up a lot. It's pushing, but size is increasing. I see 6 at 173.97. I see 3. That's a lot of shares for FedEx for the way it's moving. It's not a highly traded stock generally. So these are large orders. So right, let's see if I can catch it. Okay. So I paused the tape here because this is what you're looking for. Whole number 174 at 17, which means keep the size in mind because this will not show up every single time. It will sometimes disappear and reappear, and that's just how the tape works. Sometimes the orders become hidden, people cancel and re-enter their orders, all those things. So now you know there's people waiting to sell at 174. The bids are stacked, but not as much as the ask. There's buyers waiting at the level, but there's a huge order sitting at 174. So what we're looking for now is we're looking for the size to significantly decrease. As it significantly decreases, that's where we're looking for our entry. And if it's getting really small and you don't know if you're going to get filled on a liquid contract, you can mark it in. I'll talk about that as this tape keeps going. So. So we still see size. There's 3s and 4s. There's actually sellers fully between this 173.90 and 174 area. We're getting tons of sellers. These all look like tempting entries as they push up. That's why it's really important when you're anticipating to watch the tape. So now it's at 16, but there's an order at 20. There's what you can see is this is what's called known as the ask stacking. So the orders aren't getting smaller, rather orders are being added in, and that's why you see this pop down every time it approaches there. Buyers are buying, sellers quickly hit it down, and this process repeats over the next few minutes. And rejects. And if you got in on your contract up here and you got out, you're going to be taking probably a 10% loss, 5-10% loss on your contract. So something I do when I anticipate is my max loss per trade, I set at 200. So I'll literally on profit loss open, I'll see that where it says 200 and just set the order. So now what you see is there's 18 and 8. So the ask is just getting larger. It's not getting smaller at all. There's still no entry for me here. Absolutely not. This is way too large in order for me to anticipate. And if I got in, this isn't my strategy, but if I got in, it would be at these wicks like Emiliano explained for day trading. You can do the same, but I don't do that. I wait to watch it break. So right now it's touching 174. The ask is at 174 literally, but there's still no entry for me. So I'm still just watching this to see what happens. A lot about scalping is watching, getting excited and slamming the buy the ask button, getting into positions too quick are all mistakes that people make. You can't overly hesitate, but you cannot either take your trade really quickly and be like, I know I'm right, this is going to go up. So I think the tape froze. Oh my God. Okay. Okay, so it's still moving. So now we still see there's some sellers at 173.80. It's popping down multiple times. And also, if you look at time and sales, what you're seeing is you get a lot of large red prints and green prints. So there's no clear sentiment. You're not seeing the tape print pure green yet. It's still printing red, especially if you're watching this. So now we get that full green area, but the size is still here on the level 2. So this is showing me that there's increased momentum to the upside, yet sellers still aren't stepping down. So I'm watching. I know this is going to break eventually. I just need to know when. So that's my goal. I'm just looking for when to enter on this. So we still have 174 sitting here, 16 on the tape. And this is what we call a pop. This happens sometimes. This is what can spike you out of your position, but this also increases the price of contracts greatly. And this is the same thing that happens to the upside. So we still have 17, 5, 3. We still have large orders sitting in the 174 area, and there's the rejection. You get that rejection over and over. Still 16 sitting at 174. It's almost like there's a hidden seller that every time he gets filled, keeps adding to this. So we keep watching this here. And this is literally how you should be watching almost every breakout. Sometimes the consolidations aren't this long, but the consolidation's happening if you're set. So now what we're seeing is there's even larger orders. There's a seller at 173.87. So now it has to pop that area too. I would explain more about the tape, but it's not loading properly. So this is known as level 2. This is known as tape. And since this is loading, lagging still. So this is basically just sellers sitting at a price. This is buyers sitting at a price. And these are orders that are going through transactions. If it's green, it's above the last price. If it's red, it's below the last price. And we also see here is there's no volume spike yet. We're not getting that volume spike. So that's what we're waiting for, a volume spike, a push up, and the tape to speed up. I don't know if you guys can tell here, but if you watch on another broker, the tape really, really will speed up as it approaches these key levels. Like majorly speed up. It will start moving like ultra fast. It will speed, it will be blinking colors. Sometimes you can't even read it. So this is what's telling me that there's buyers waiting for this to break. There's accumulation happening at the bottom. There's strong buyers constantly buying up shares because they're accumulating for a larger move. So I'm pretty sure the break happens somewhere near here. Watch exactly what happens. I'll probably rewind it once to explain again. So if anybody has any questions, just send it in the chat. Okay, so it's pushing down still a little bit. Watch for accumulation. It's something that's really underrated in tape reading. But if you can identify where the strong buyers are, you know exactly if it's going to pop. If you don't see strong buying happening at a range, if you don't see it failed, this is what, if you look at my trade reviews, I explicitly say this is what's known as failed to move lower. It's repetitively trying to break to the downside. It's getting smashed down, but it cannot move lower, which is what shows sentiment. Huge buying wick on the 5-minute. So this is just a trade I'm 90% sure is going to work. I just don't know when, and I want to anticipate it getting before the pop. Don't put front and wrist. Like I never average down. So now we're getting smaller sellers. There's still the 174 seller, but the 173 area is becoming weaker. Earlier we were seeing 5s, 6s. Now we're seeing 1s. And now we're just waiting on that massive seller at the 174 area to pop. And if you watch SPY, what's happening is SPY is kind of chopping. It will push up. You'll normally see when the pop happens, SPY is also pushing a little bit. So now we get a little bit of a gap up on the 1-minute candle, which is also representing strong buyers. There's few sellers here, but the 174 seller is still sitting. And what we might see here, I actually have not watched this tape fully. So what we see here is at 174, we have 21 sellers. What might happen is an ask pull or it might get filled. So sometimes what happens is someone's holding a sell order there and they'll pull it. And when it gets pulled, it pops really hard. That's why we repetitively say get in before the break.
Jay.
Yeah.
If you mind me adding to what you're actually mentioning, take a look at the SPY chart. You guys saw how SPY was actually red, but FDX was pushing up. That means that as soon as SPY turns green, this would actually result in a push up.
So that's actually what's known. I'll just put it up here. It's a relative strength. It's actually something I wasn't going to mention today, but since you brought it up, it's actually really, really important. When you watch something, especially on Amazon and Tesla, it's something that's helped me a lot. You watch something fail to move lower or higher as SPY is going against it. For example, today in chat, I was saying Amazon's holding the low. I think me and Emiliano were both watching it. SPY's rallying. Amazon's not able to push higher. So that's what we mean by watch SPY, watch the relationship. It shows the strength related to the market. This is much, much, much stronger than the market. It's not dumping. Market pulls down, it holds its level. So that's what we take. So let's keep watching this. So we still have the seller at 174. I actually want to see how this reacts. I haven't fully watched this one yet. So it pops. So what happens here is it pops. So if you couldn't get in before, what I would do is I would literally just mark it in now because that seller's gone. I guarantee you this will not hold above the level consistently. It will pop up and down a few times, but eventually it will push because the seller's gone. So let's actually go back a few seconds to watch that part. Oh, I went back a minute. Shoot. 9:38. We'll go back to the open of this candle. And I don't use Thinkorswim's tape anymore. It just became too difficult. I use DOS's, but DOS won't let me do replays. So 21 sellers sitting there. I'm pretty sure this is an ask pull. It disappears. It's not getting filled, but we'll see if Sjai shows up here if this stops lagging. So you have 174 still sitting. 173.87 getting small, and then pop, yes. So this is what's known as an ask pull. There's no continuation here. This is very difficult to get in before the break. What happens is instead of waiting for this candle to close, I would immediately mark it in when I see this. I did this today on Baba when I entered. I marked it in because I saw it pull like that. And what happens is when you get this pull, that seller is gone. It never got filled. There's no large order getting filled for 2,100 shares. What you see is it pops. And we'll actually, since this is going, I'll just show you what a strong tape looks like. So there's buyers here. 173.95 has buyers. It's holding that right up the low of the level. It's holding. Every time it pops down, it pops back up. And what you see is as it pushes, you'll see that there's buyers the whole time. So we have some buyers here. We have size on the tape. But if you see the size appears and disappears, it's super quick. You're not seeing a level hold. Like we saw 21 on the tape, 17 on the tape for minutes. You'll see nothing hold you. It'll be 2 and 3s, and it'll just disappear straight. And that's because these orders are getting hit. People are buying the ask. Tape's printing significantly green. This is way slower than the tape should be, but the tape's printing mostly green here. And that's basically what you see. So there was a really good example, but it was yesterday, so I can't show it yet. It's not uploaded here. But this is where people get shaken out, including me. It pops back down and you get scared and you're like, it's not going to hold. But as long as it doesn't close below this level, as long as you're not seeing a 100 seller, 50 seller, 10 seller, 21, 25 sellers holding that level, there's no reason to be afraid of it. You just hold it as this pushes and you scale out whatever your strategy says. And if you notice, volume picks up right here. volume is picking up nicely and transactions are going through. So on DOS, or not on Thinkorswim obviously, but on any other broker, the tape would be going really, really fast. And I don't know how to emphasize that without showing you guys. I might try to screen record next time. But this is where I got out on this trade. I got out as it touched 175 because I wasn't sure if it was going to pop. It did pop, but I wasn't sure and I didn't want to hold through that. So I bailed at 175 and just went way, way, way higher. But we'll just watch the tape through 175 and then I'll watch another. There's another clip I want to show on the short side for this one. So this is what, if you wanted a re-entry, I would look for a re-entry above 175, but you would have to be quick. This is why I'd consider the re-entry. This is definitely still extended, but this area here shows me there's renewed buying pressure. It's not straight up. It's pulling down. It's holding the level. It's getting in. So some traders will have limit orders placed here to buy in to get filled. What happens is you see we get the rejection around 175 for a while, and that's where I bail, and that's where you could look for re-entry and stuff. But that's enough of this one. Does anyone have any questions on this one before I go on to another example? Okay. If there's no questions, I'll go on to another example. Let's see. So this one was Amazon. If you guys want to look at the chart, it's Amazon August 19th at 9:40. If anyone who's been doing tape reading, been studying, has anything to add, feel free. So Amazon's tape is significantly, at least in my opinion, harder to read than FedEx, Target, some of these smaller names. The tape is quicker, the size is smaller because it's such an expensive stock. So it's generally harder to read, but it's still. So with scalping, are you buying at market on breakouts? So what happens is if I actually, so sometimes I think there's a pattern. I'll show you guys this one. I can't do the tape because it was today, but if there's a level like this and I'm getting a consolidation and, for example, we get a descending wedge inside the range and I get in here, I'm definitely not marketing. I'm just buying the ask because I'm not in a rush. But when I see a tape that's stacked like this and I'm looking for that pop, I will 100% market it as it pops because I'm 90% sure it's going to continue. And even if it doesn't, there's no way I can get filled buying the ask. And Thinkorswim's buy the ask button is laggy. It does not put you at the current ask price. It's like 2 or 3 seconds behind, which is a lot when you're scalping. So I'll hit buy the market and I'll take slippage. I took today on 10 contracts on NVDA, I took 20 cents slippage, which is $200. But it's something you have to deal with if you want to catch some of these plays. It's just hard. I've seen some guys do it on active trader, place it above the ask and get filled. But for me, I figured out that marketing is what works quickest for me on some of these plays. And I haven't had any really bad experiences, like insane slippage. But in general, I do use market, but it's a lot of discretion. If you're new, I don't suggest using market. I suggest doing the second type of entry, which is more of waiting for the range to break, pull back, and you enter right as it's pushing again. I'll do one of those after this, but first I'm going to go over Amazon's short example. So this one. So this day, let's see. Okay. I do not know why, but SPY is not showing up here, but whatever. Yeah, whatever. Okay. So we have Amazon. So what I'm seeing is a huge sell-off. I see this climatic candle. This is definitely a squeeze. There's a bunch of longs trying to get in. Even I would probably, if this wasn't so extended, I would be looking to long above the high. But what we're seeing is a huge squeeze. Oh, thank God, this one's moving smooth. So I'm seeing a squeeze. I'm looking for an entry here. So based on my plan, there's 2 entries. The first is I could enter here anticipating the low break, seeing a mini consolidation within the range. Or second, I could enter as low day break. So I'll show you guys the entry that I actually took. So if you look at the tape here is much harder to read. There's no huge size. So there's 1s and 2s. This is why tape reading on Amazon and Tesla are extremely difficult on Thinkorswim. So you get a 3 at 32.97, which is showing me that there's sellers stacking up around this range. So right here, what happens is we're getting sellers. There's strong sellers in this area. And that's the first time that you can short. You could short underneath here for a more risky entry. The second entry is waiting for it to break low of day and getting in. This is definitely extended, but if I was expecting to hold through a retest, if you guys watch what happens here, retest, But as you can see, the tape's actually moving for once, and it's fast. This is significantly fast. So if you watch here, 221, this is large for Amazon. This is 400 shares, and this is where we know that there's going to be a squeeze. There's a 3284 buy order. That's 400 shares on Amazon. That's relatively big for Amazon. So this is where we know that we're looking for an entry. So what I'm doing is I'm anticipating the pop below this area. So it pushes 3280. It's pushing 3280. Selling is strong. I got in right there. I got in as that level popped. So I was up almost 200 or 300 in a few seconds as it pushed down here. I could have got out. I placed my sell order, no fill. So what happened is I had to hold. So I can't show you guys, SPY is not loading, that's weird, but SPY was pushing down at this time, so I wasn't too worried about the trade, but it holds the low for a while. I marketed in. So when it was pushing down here, it was about 150, 200 in, 200 green. So what happens if you watch, this is the type of trade I'd suggest newer traders take, not this first entry, but the second entry I show you guys. This will very likely not fail, and when it fails, what happens is you get good risk to reward. Your losses are very small. So this is pushing up. I see that pop. That was actually a huge size. There was 2 10s here. Now I only caught one, but this is what's held me in the trade. I would normally be out. This is extended bad entry in my, not bad entry, but not as good as I would want. It's 4 boys down. It's extended. It's 2 big boys. So I would be looking to get in on a retest, but I saw the sellers here and I was like, I'll hold. So I was watching the tape go and I was watching this constant rejection over and over. So at that point, my mental stop is a clean break and hold above this point, about 3285-ish. But the seller is holding. There's a seller, it just disappeared for a second, but there was a seller at 3284. So that's what I'm seeing, the seller. So we're getting a push. It's struggling at low of day again. So it's constantly struggling. So if you're in this position and you're not green, you should be looking to get out by now because this is not good. It's holding the level. But at the same time, there's heavy sellers. So this wasn't perfect in my opinion, what I would want to see, but at least it's rejecting over and over. And with the sentiment of SPY is what kept me in this, SPY in the tape. I decided to hold a little longer. So I watched this candle, it's pushing, but it's not able to break. So if it broke this is where I'd be really worried. If it broke and held above. So it's constantly rejecting off that seller. The tape is mega stacked. So these are further out orders, but what we see, we saw 2 10s here, it disappeared again, but we have 10 sitting. And this order has been touched multiple times, but it's still holding. So we get our first rejection tail here, and there's a little wick, and it's not holding. It pops and it immediately shoots down. So I was down about 300 at this point, 300, 350 on this trade because it popped up. So it wasn't too good a trade, but I was still holding. My stop was here, but it's still holding below. So I was watching this one. So I get this tail. This is where I'm like, it's time to add. I normally do not add on Amazon and Tesla, but this was rejecting super clean. So my add point was right below 3280 because that's the whole number. That's where this one's holding. My add point's below 3280, and I had an order ready to just send on the ask if this held below. So if anyone has any questions, just send it in as we go. Anything you want me to show on the tape, anything else relating how I anticipate how I get in, get out, where my stop is on these trades, any questions, feel free. So I'm still holding. This wasn't exactly how for red I expected to be, but because of the wicks, I decided to hold. There's no point in bailing red at this point. The wicks are still holding. There's no sentiment yet for me to say I need to get out of this. There's no strong bullish close, none of that. So it's still showing me, these are in my opinion, equal to red candles. This is just showing me that they're strong sellers. So at this point, what's happening is I have a profit order set to take profit on a contract here because I want to be out in case it popped again. And it's going near 3270. So this area I was worried if it's going to pop. But what happens is if you watch the tape, we have 1, 2 orders coming in here. 3 on the ask. So the sellers are still pushing this down. There's constant selling push. And if you notice the whole time, the bid size is at literally 1 other than at 3270 when it touched. The bid size is just not increasing. No one's buying this up aggressively. No one's buying the dip. This isn't like Tesla when it dips, everyone's like, let's get in. So now we have our first order, 3277 at 5. So that's where I'm watching still. There's a buyer sitting at 3277. So by this point, I had added 1 contract, but I was out of my first contract. So I was watching for a pop. So now I'm holding 1 contract, seeing if it's going to pop below. My stop is if it pops up, I'm out. And at this point, I'm green 200 closed on one contract, and I'm holding the other one red like 50 or 100 because I got in right about here. Okay, so this is a little longer than I usually hold. If I take trades like the first one I showed you on FedEx, I'm literally just out on the pop. But this one was a little longer. I held. And eventually what you'll see is on the tape, we have huge size. This is just much bigger than you see on Amazon. 3286 has 11 sellers. People are hammering this down. Buying is still small. There's no aggressive buying. I'm not seeing too many green prints above the ask. Nothing too aggressive. And when I say above the ask on DOS, what I use, you'll see that it will print in a light green versus a dark green, and a light pink if it's below the bid. But here you can't see that, so I just can't explain that too well. So I'm still watching this. Selling is still stacked. So this was a really clean tape for what a retest should look like. Like, you rarely see it this clean. You'll see some sellers, you'll see prints coming in, but now it's pushing. So I actually might have added another contract here, but I didn't want to oversize. That would be way above my max sizes. That would be like 3 contracts in. So I held and I just was watching my contract. So let me erase that. So I had an order to take profit at 10%. I set that automatically because Amazon, you guys can ask Emiliano about this, but it pops a lot. It pops and doesn't hold. So I was out. This is where I was out. It pushed the low, I was out, and it pops. It pops and I'm out. This is 4 candles down. I'm out of this by now. So this tape, I think for anyone who hasn't seen tape on what a retest should look like, this is actually a really good example. Rewatch it on your own if you guys want. This is August 19th, 9:46. So this is what retest, basically a retest, a good stacked retest looks like. And when you're buying a breakout or a breakdown, when it's approaching this level and it's consolidating near the high, you should see the exact same thing you saw here. Buyers stacking, sellers weakening, small on the bid, big on the ask. So that's what kept me in this trade. This was down a lot, like more than I wanted to be when it popped, but it showed me that it was going to continue down. I held. I had my max stop obviously set, but I held. And so before I'm going to wrap it up, but before I end, there's a few other things that I've learned recently that help a lot in terms of how to execute these trades. So first of all, what happens is if you get in anticipating a break or after a break and you see something, for example, let's say you're in this trade and you're getting short here. You're getting in short on the retest. If you watch this carefully, it pushes down to 3270, it bounces, it pushes down again and bounces. By the second bounce, this is one way I found that's really reliable. Rarely you miss a move. By the second bounce, you should be looking to get out because that means there's buying pressure there. Unless you're planning to hold through a full pullback, the second bounce off a level normally means that the buyers are strong enough to hold it up for some time. Or if it's on the upside, sellers are strong enough to hold it down for some time. So your goal here is to be out. You just want to bail on this and then you want to look for a re-entry. And the key is I've failed on trades. I've literally taken trades, even today, actually I'll get off on demand and show you guys 2 things here before I wrap it up. So let's look at Tesla today. So, okay. So we're here. I was expecting this to rally today morning. I was watching it. It was weak into the pre-market, but it pulled back. It pulled down, and this showed me that there's buying pressure even in the pre-market. So I don't like trading this first breakout. I rarely do unless it's super clean. I don't because I've got faked out multiple times. What happened is I was watching this level. I can't show you guys the tape for this yet. It's not on demand, but I'll explain my execution. So this is an example of what fear does to you. So I got in. My first time I got in as a popped here, and I got out as a closed below. So my plan explicitly says if you anticipate a breakout, I was in before this pop. So I was green about 100 when it popped, but it pulled back down. My plan says if it closes below the level and it continues to push down, so about here, if it pushed below the open of the previous candle, you get out. But it didn't. It kept going. But I had stopped out. I stopped out once for $130 on the first trade. I stopped out as it popped down and closed because I wasn't sure. I'd had bad experiences with Tesla like every day this week on the open. So I got out. So I re-entered here. So then I saw a push. I'm like, shoot, I missed this. I re-entered here. It pushed up a little and then it popped. Came down and then I got out one more time. I took another $90 loss and I was down now 220 on Tesla. So then my third entry is I get in here and I'm like, I'm holding this. And there's no way I'm stopping it unless the candle literally just closes below. There's no point in me doing this again. I held. I made it all back selling on this pop. I saw that it was rejecting 2080 on the tape, and I bailed, and I made back 350 on that trade. So the point here is not that you should be fear exiting or any of that. Point is two things: trust your plan and hold. And number two, when you enter a trade, I would say up to 3 times you can re-enter looking for the real move, because multiple times stocks fake out like this. For example, Apple today, classic fake out. This was clean. There was almost no opinion unless you're like a master tape reader to avoid this one. I actually was trading another stock, so I missed this. But you get in, this pulls back, you close, you get in as it breaks the low of this candle, you take a small hit. If you were like, no, this fake out is not going to make a move, and you miss it again here, you don't get in. That's just not smart. You want to be able to catch these moves. 2 losses with proper risk to reward can be easily outdone by 1 winner. So here I was hesitant. I wasn't too confident this was going to work, so I didn't anticipate this breakout. I saw the pullback as it pushed. I entered, got out here. Sad story, but it ran another 100% on the contract just on this move without ever going red. So that's the type of thing that you want to be re-entering. I've heard people a lot say, fake me out, I'm done with this stock. Like, that's not the way it should be. You should be looking for re-entries on these trades 100 times. I've heard like a lot of guys looking for re-entries, and that's how you make back your losses and make more. You can't get discouraged if the stock fakes you out once. Now, the last thing I want to show today. So here, so I was done. I said alert in case it pushed near this level. I said alert right about here. So it triggers my alert, pulls back. I see this. So I see this pattern. This is something that I saw Albert Trades post on his Instagram a while back, but I started studying this type of pattern. So I see this pattern. I see a channel coming down. The second I see this pop with volume, I'm in. I literally marketed in on a contract for $12. I was trading smaller size now. This is midday, but I marketed in for a contract for $12, and I just sold as a pop. This was 30% in exactly a minute as it popped up, and I bailed on this. The thing is, this is what I call pattern anticipation. It's one of the things that has faked me out the least of anything. You watch for a pattern or a hammer candle to form right under the level. And you get in as the pattern breaks with, if you're in multiple contracts, first target at the high, second target above, and your stop is right below the breakout candle or a tape rejection. So this is something that I think everyone should look for. It's underestimated, not used. People wait for the key level breakout. If you can get in before, if there's anything telling you, like Emiliano was emphasizing on day trading, you want to get in at the best price you can get in. So for him, he's getting in near the low of the consolidation because he knows he's going to move up and his stop is tight. Same way here. The second this breaks, I'm sure that this isn't going to be a rejection. It's much more likely. Nothing can be sure, but probability-wise, it's much more likely to continue now. You're getting a pattern breakout. You're approaching a key level. Volume is picking up. Tape is speeding up. If you look at the volume, it's a clear volume trend break also. You're getting volume finally breaking, increasing. You get in here. This is, if you have this is 100% on Friday. On a regular day, this is 30-40% on the full move. So if you're green on that, it gives you the flexibility to chase these next moves, which weren't as clean, but you could have scalped these for a few cents or stopped out for a few dollars on all of these. So yeah, so that's it for me. If there's any questions, let me know. So on Apple, why did you sell so early without any red candles on Apple? Okay, so again, that goes back to a plan. So my plan is to take profits to 10% and leave some to run. What happened is I actually got a partial fill on Apple. So I was in 7 contracts instead of 10. If normally my plan is to leave 2 to run. So what happened is I was up like, I think like 150 on this. So I bailed on 7 contracts to lock it. But it was a full mistake. Like, I'm still working. My plan is down to a T for everything. I was talking to Noah and Emiliano about this. Down to a T except for when to hold a winner. Like, I still haven't mastered knowing how long to hold a winner. It's something that's difficult in general. So I basically was taking my profits. I was happy locking in. And then I opened back the chart and I opened the Discord to the frustration channel. And I'm like, wow, this just ran 200% and I got out. So that's something I'm working on. When I find a way to measure, the only thing I found so far, retest moves are much more likely to run, especially into all-time highs. On Apple, the first retest, there was no clear retest move yet. There was no candle like this, which indicates a clean retest to me. So this candle is the first, if you look on the 1-minute chart, clean retest candle above a level, indicating that there's probably a big run to go. That's the only thing. NVDA, when it ran yesterday, had the exact same pattern. What we see is, let's see, that was today, right? Yeah, yesterday. Okay, NVIDIA, same pattern, same exact mistake. I got in here, I held through the pullback, I scaled out here, this ran 70% on a Thursday. Same mistake, retest candle confirmed. So if you guys see the retest candles, it's better to hold. And then, okay. Yeah, for sure. That's what I've done somewhat. Yeah, I'm starting to do that. I'm starting to rather hold for longer, scale out. I was reading about the importance of scaling out, just sell contracts into strength. So I think I'm gonna wrap it up there. If we have time, I want to Noah to share his JD swing because that's a really good swing example. But if we don't, then we're good. So I think I'll give host back to you. Okay.
Perfect, perfect. All right. So far as did everybody understand what I said and did everybody understand what Jay said? All right. So, I think that that's going to be it for today, or at least this webinar. Again, we will be doing more of these every week. We'll try to see if we can fit in two. Do you trade with the Greeks in order to assess risk? I mean, Jay, if you want to hop in and answer this question as well, I'm going to go ahead and give my 2 cents on it. Do I trade with the Greeks? Personally, yeah, let me go ahead and mute you. There you go. Personally, when it comes to the Greeks, I don't use them unless it's Friday. If it's Friday, it's something that I'm looking at because it's not, you know, as soon as you get closer to expiration, the one Greek that I'm most worried about, which is theta, will always be there. So I want to make sure that I'm choosing a contract that's near or at the money on the asset that I'm trading. And at the same time, I want to make sure that I'm looking at a contract that, I mean, the theta is not going to be low if it's on Friday, but I do want to look at the contract with the most volume. So, in terms of when you're looking to get contracts at the money, near the money, or in the money, you should be good. But if you're looking for contracts out of the money, specifically on higher tech stocks like Amazon, Tesla, because you could lose 50% in 5 minutes, doesn't matter. So just you don't need to be on top of the Greeks all the time, but just make sure that you're choosing the right strike with the correlating Greeks if we're getting closer to expiration. And Jay, you want to add to that?
Yeah. So basically, I basically what I look for is first of all spread. If the spread is relatively, it should be 5% or less of the last price or the ask price. If it's anything more than that, 10% is my max. After that, I don't trade it. It's just impossible to trade options with spreads that are huge. For example, Noah called out, I think it was DE today. Spread on there was a perfect setup. The spread on the option contract was literally like 50%. So that type of thing is not possible to trade. So what I look for in the Greek specifically is that for any stock other than Tesla and Amazon, I'm looking for a delta between 0.40 and 0.50. That's my threshold for anything that's not Amazon and Tesla. So what I'm looking for there is high volume. I look for huge volume and open interest. And I actually just read this recently on Instagram. So some people go to strike below the highest open interest and volume because that tends to have a huge jump in the ratio as the stock pushes up. It's kind of a magnet for the jump, but I stick to the highest volume and open interest. So for example, it takes me 12 seconds to choose a contract because I'm scalping. So I have to be quick to choose my contract. So I just, biggest number on the volume, delta between my threshold, that's the one I trade. I don't look at the price too much. Tesla and Amazon, what I do is I look for 0.30 to 0.20 because they move more volatile, and I look for not bad spreads, huge volume. Normally Tesla and Amazon, I look for like 5,000, 10,000 volume, and open interest about 1,000 or more. And I trade contracts that on Tesla and Amazon. I try to trade between, I'd say, $15 and $30. I don't go more than 30. After 30, it's just too risky for me. The contract's 10% stop is above my max risk already. So it's the answer to your question is basically be specific about what your price range is for a contract and choose based on that as well as spread. The spread's the most important thing to me. Spread and liquidity. The delta does not matter too much to me. It's liquidity and spread. I don't want to be in something that I'm going to start down $200, and I don't want to be in something that I literally cannot sell. That's happened so many times. I'm up on a contract $200, but I cannot sell. I just don't get filled. So that's the most dangerous thing. So yeah, that's it for me.
Awesome. Well, you guys, I think we've done enough. If you guys have more questions, please lead to the questions and lessons tab on the Discord. We will be answering some questions there. And I hope you guys enjoyed today. Again, we will be doing more of these, and I hope you guys have a great weekend. All right? No problem. Anyways, have a good one, you guys. Take care, stay safe, and have a good one.